If you have even a single dollar in the stock market right now, you need to pay attention. The rules didn't just shift. The entire game board got flipped upside down. Donald Trump officially confirmed that Jerome Powell is out. We saw that coming. But the person replacing him? That's where Wall Street's nightmare begins. The moment his name was announced, stocks started dropping. Gold and silver took a historic plunge. The era of easy money just died, and the collapse everyone feared might have been triggered by the one person nobody expected. You need to understand what just happened because your portfolio is directly in the crosshairs. Usually chaos creates opportunity, but this time feels different. Trump's new pick for the Federal Reserve is Kevin Warsh. You might not recognize his name yet, but Wall Street is absolutely terrified of him. Let me tell you why. Go back to 2008, the great financial crisis. The world was falling apart. Banks were collapsing left and right. The Federal Reserve was panic printing money to stop the bleeding, handing out bailouts like they were going out of style. Kevin Warsh was there. He was a Fed governor. But while everyone else was flooding the system with cash to save the day, Kevin was the one standing in the corner shaking his head. He hated those bailouts. He feared all that free money would destroy the dollar's value. He actually wanted to keep interest rates high while the economy was burning down. He warned everyone about inflation, called printing money a trap. Think about that for a second. In the middle of a crisis, he chose the hard road. Fast forward to 2011. The Fed decides to print another $600 billion to help the housing market. Kevin Warsh fought it. He fought hard. He called the benefits small and the risks massive. When he realized he couldn't stop the money printer, he didn't just complain. He quit. He resigned. That tells you everything about his character. He's someone who would rather see stock prices fall and the economy slow down than risk destroying the currency. Most Fed chairs want to be liked. They want the stock market climbing. They want you feeling rich. Kevin Warsh doesn't care about any of that. Even recently in 2022, he came out swinging. He said the Fed waited way too long to raise rates, that they lost all credibility. He believes quantitative easing, which is just fancy language for printing money, creates bubbles. He thinks it makes rich people richer while hurting everyday people. His entire philosophy is straightforward: higher rates, slower growth, stronger dollar. This is the complete opposite of what the market was betting on. Wall Street had a script for 2026. It was simple. Trump gets elected, Trump pressures the Fed, interest rates drop to zero, the money printer goes wild, stocks go to the moon, we all get rich. That was the plan. But this appointment? This is a plot twist nobody saw coming. It's what we call the Trump paradox. For the last year, Trump has been promising lower interest rates. He criticized Jerome Powell for not cutting rates faster. Everyone invested thinking the party would never end. We thought we'd inflate our way out of debt, that a Big Mac would eventually cost $100, but our Apple stock would be worth millions. That dream just died. Kevin Warsh is expected to do the unthinkable. He's going to crash the economy to save the US dollar. He's going to turn off the money tap, shrink the Fed's balance sheet, stop the United States from becoming a failed economy. Just 1 month before the election, someone asked Warsh what he'd do if he got the job. His answer was chilling for investors. He said policies good for stockholders are bad for people living paycheck to paycheck, that we're enriching the wealthy at the expense of everyday Americans. Read between the lines. He's saying he's willing to hurt the stock market to help the working class. He's willing to pop the bubble. The market hates uncertainty, but this isn't uncertainty. This is a promise of pain. The new leadership believes that for the country to get healthy, the stock market needs to take its medicine. And that medicine tastes terrible. But here's where it gets weirder. Just when you think you've got this guy figured out, he completely flips the script. The Kevin Warsh of 2026 is starting to sound different from the Kevin Warsh of 2008. Suddenly, the man who hated cheap money is talking about lowering interest rates. He's going on TV saying we need to get rates down to help the housing market, wants 30-year mortgages to be affordable again. He's pitching himself as the White House's best friend. So you have to ask yourself, did he actually change his mind? Or is he just telling Donald Trump exactly what he wants to hear to get the job, only to switch back once he's in power? Classic Trojan horse strategy. But it doesn't matter what's in his heart. It matters what the market thinks. And right now, the market is terrified of a strong dollar. To understand why, you need to think like Trump. Trump actually wants the US dollar to be weak. That sounds crazy, right? Usually strong is good and weak is bad. But in global economics, it's the opposite. Think of the US economy like a grocery store. If the dollar is strong, our prices are high. Other countries look at our goods, our cars, our corn, our tech, and say too expensive. I'm buying from China. But if the dollar is weak, we become the discount aisle. Our stuff gets cheap for the rest of the world. They buy more American products. Factories get busy. Stocks go up. The government's massive mountain of debt becomes easier to pay off. Trump wants a weak dollar to win the trade war. But Kevin Warsh's entire career has been about protecting the dollar's value. He's the strong dollar guy. So we're heading into a massive collision, an unstoppable force meeting an immovable object. The president wants inflation to juice the economy. The Fed chair wants deflation to save the currency. This is a recipe for volatility. The days of the stock market just going up in a straight line are over. The safety net is gone. For the last 10 years, investors had a rule: buy the dip because the Fed will save us. That rule is dead. The Fed is not coming to save you. This puts you in a dangerous position. We're entering a financial kill zone. Whether Warsh obeys Trump or goes rogue, the outcome is chaos. And in chaos, you can make a fortune or lose everything. Here's the truth about the stock market that nobody tells you. Prices don't fall because of bad news. The market can handle bad news. What the market cannot handle is uncertainty. The market is like a control freak. It needs to know exactly what's going to happen next. When it can't predict the future, it panics and sells everything just to be safe. That's exactly what's happening right now with Kevin Warsh. He's a giant question mark. Nobody knows what he'll do, and because nobody knows, everyone's running for the exit. But here's the thing about market panics. They're almost always wrong. The stock market is a drama queen. It overreacts to everything. When things are good, people buy like they have infinite money. Prices go way too high. When things are bad, people sell like the world is ending. Prices go way too low. The pendulum swings too far in both directions. It never stops in the middle. So let's take a deep breath and look at actual data, not emotions. Every single year, the stock market drops. It's a guarantee. Even in the best years in history, we still saw drops of 10 to 20% during the year. It's the price of admission. The legendary investor Charlie Munger had a brutal rule about this. He said if you cannot handle a 50% drop in your portfolio without panic selling, you don't deserve to be rich. You deserve the mediocre results you're going to get. The math backs him up. Look at the last 45 years. In 34 of those years, the S&P 500 finished positive. That's a 75% win rate just by showing up. But you're probably thinking, what if this time is different? What if we hit a recession? Fine, let's assume the worst-case scenario. History shows that the average time to recover from a massive crash is only 1 to 2 years. That's it, 24 months. If you're investing for the long term, 2 years is the blink of an eye. Most people try to be smart. They sell now hoping to buy back in when it's cheaper. That's a losing game. You have to be right twice: when to sell and when to buy. Nobody gets that right consistently. So how do you actually make money in 2026? The answer is going to sound stupidly simple, but it's the hardest thing in the world to actually do. Imagine you're walking into an Apple store. You want the new iPhone. Yesterday, it was $1,000. Today you walk in and it's 500. Do you scream? Do you run out crying? No. You take out your wallet. You buy two. You celebrate because you got a deal. So why do you do the exact opposite with stocks? When Amazon or Google goes on sale for 50% off, people don't celebrate. They panic. They think something is broken. The only difference between the iPhone and the stock is your psychology. If you're not planning to spend that money for 10 or 20 years, who cares if the line on the graph goes down today? It literally doesn't matter. This isn't a crisis. This is Black Friday. The best investors in the world, Buffett, Munger, Dalio, they don't fear the drop. They wait for it. They sit on cash like a sniper waiting for the moment when everyone else is terrified. And right now, people are terrified. Here's the secret pattern I've seen making content on Xkane AG for almost 10 years. I've watched millions of people react to the market. The same loop happens over and over. First, everyone gets greedy. They see their neighbor making money, get jealous, suffer from FOMO, throw money at anything that moves. Prices go way higher than they should, disconnect from reality. Then the music stops. Fear takes over, and fear is much stronger than greed. People sell good assets for bad prices because they're scared. Don't be that person. You cannot predict the future. The only way to guarantee you don't get left behind is to stay on the roller coaster. Don't unbuckle your seatbelt while the ride is moving. View these drops as gifts. The Great Recession in 2008 was terrible for the world, but for investors with cash, it was the opportunity of a lifetime. It allowed me to buy a house in California for $70,000. That sounds impossible today, but it happened. I never would have been able to afford a home without that crash. It happened again in 2020. The world was shutting down. The S&P 500 crashed to 2,300 points. I was telling people to buy. It happened again in 2022. Bitcoin crashed to 16,000. Everyone said crypto was dead. I was buying at 16,000, at 30, at 70. Why? Because I don't need the money today. If I don't need to spend it for 5 years, I don't care what the price is on Tuesday. Now, about Kevin Wersch, here's my controversial take. There's no way he's going to fight Donald Trump. Let's be real. Trump is the boss. He essentially fired the last guy because he didn't lower rates fast enough. Do you really think Trump would hire someone who's going to do the exact opposite of what he wants? No chance. They might use different words, but they have the same goal. Trump wants the market up. Wersch wants the job. They're aligned. But I have to give you a warning. Kevin Wersch is not a prophet. In 2007, right before the entire global banking system collapsed, Wersch went on record saying everything was fine, that banks were strong, that there was no risk. He was dead wrong, and the world paid the price. So anything can happen. The experts can be wrong. The president can be wrong. The charts can be wrong. That's why the only safety net you have is time. If you hold good assets for 20 years, none of this noise matters. The crashes become blips on a chart that goes up and to the right.